Hello, everyone. Welcome to AI Crypto Insights. Today is January 4th, 2026, and we're going to quickly review the market highlights in just a few minutes, all from an AI perspective. Just a reminder, this program is for educational reference only and doesn't constitute any investment advice. Okay, let's dive right into this because we're looking at a really fascinating paradox in the market today. On one side, you've got Bitcoin just roaring past the $91,000 mark, but on the other, the fear and greed index is flashing extreme fear. So what's the deal here? How can prices be surging while the market's mood is basically telling everyone to run for the hills? Let's break it down. To really get to the bottom of this contradiction, we've got to start by looking at the raw numbers that are defining today's powerful yet kind of fearful rally. I mean, the sheer momentum here is what's catching everyone's eye. Bitcoin has totally smashed through that 91,500 level, up a solid 4.5%. Ethereum is holding its ground above $3,000, but wow, the real fireworks are in the meme coin sector. Coins like Dogecoin are just seeing these explosive 25% gains. It's a broad rally for sure, but the heat is definitely concentrated in those more speculative corners of the market. So what's fueling all this fire? Well, this isn't just organic buying. It's a classic story of leverage running headfirst into a wall of institutional money. And this is the power of a short squeeze in action. Get this, in just the last 24 hours, a staggering $140 million worth of bearish bets have been liquidated. These are traders betting the price would go down. That forces them to buy back in to cover their losses, which, you guessed it, just pushes prices even higher. It's a really painful feedback loop for anyone betting against the market right now. And you can see that speculative heat most clearly right here. Seeing 25% gains on major tokens like Doge and Pepe tells you that a high-risk appetite is back in certain pockets of the market, and it's being driven by that short squeeze momentum we just talked about. But, it's not just a retail-driven frenzy. On the very first trading day of the new year, Spot ETFs saw a massive net inflow of over $646 million. This is the big money stepping in, which suggests that institutions are actually using this fear as a long-term entry point, completely ignoring that short-term market sentiment. Now, with the mechanics a little clearer, the wider story is a total battleground. You've got Wall Street giants and crypto visionaries offering completely different takes on what all this means for the future. So first, on the bullish side, we have what could be an absolute earthquake for mainstream adoption. Charles Schwab, a behemoth managing $12 trillion in assets, is planning to offer spot Bitcoin and Ethereum trading this year. I mean, this could open the floodgates to a huge new wave of investment. But on the other hand, there's a pretty big shadow hanging over the market. MicroStrategy, one of the largest corporate holders of Bitcoin, just reported some major losses. This is sparking fears that if their situation gets worse, they could be forced to sell their massive Bitcoin holdings, which could, well, trigger a flash crash. And adding to this whole debate, you have influential investors like ARK Invest's Cathie Wood, who's boldly declaring that the historical 4-year cycle, that predictable pattern of boom and bust, is officially over. She's basically signaling that we're in a whole new paradigm and predicting new highs for 2026. But hold on, not everyone's buying that. A lot of other analysts are pushing back hard. They argue we aren't in a new cycle at all, but we're still in the bull run that began when Bitcoin bottomed out at $16,000. From their point of view, this rally might be getting a little overheated, and we should be cautious. So the key takeaway here is, even the experts are completely divided on where we stand. Now, zooming out from the crypto-specific news, the global landscape is adding another thick layer of complexity and uncertainty to this already really conflicted market. For example, while recent U.S. actions in Venezuela didn't immediately shake Bitcoin, North Korea's strong response is a reminder that global instability can change things fast. That could potentially drive investors toward assets like Bitcoin as a safe haven. At the same time, we're seeing huge capital flight. A stunning $110 billion left South Korea last year alone because of strict regulations. That just goes to show how much government policy can dramatically impact where the money flows. So what on earth could break this stalemate between bullish prices and bearish sentiment? Well, all eyes are now turning to some key economic data that's coming out next week. We've got 3 major reports on deck. Monday's report on manufacturing health, Wednesday's report on the larger services sector, and then the big one, Friday's non-farm payrolls, which is the main U.S. jobs report. Together, these are going to give us the clearest picture yet of the health of the economy.
And the outcome here is absolutely critical. It really boils down to this. If we see strong economic data, that could convince the Fed to delay interest rate cuts, which would probably put pressure on crypto. But if the data comes in weaker than expected, well, that could be the green light this rally has been waiting for, forcing the Fed to cut rates sooner.
Which brings us to the final multi-billion-dollar question on everyone's mind. Is next week's data going to be the catalyst that validates this rally and finally launches Bitcoin toward that psychological $100,000 milestone? Or is it going to be the pin that pops this conflicted, fear-driven bubble? AI analyst conclusion. The market is currently in a high-stakes tug-of-war between a leverage-driven price rally and deep-seated economic fear, with next week's macro data poised to be the tiebreaker. Feel free to share your thoughts in the comments section. See you in the next episode.